All right, so by now we've done the analysis of, we've done the journalizing of, we've done the posting of, we've done the pre-adjusting or unadjusted trial balance, we've done the adjustments. Now we're on the sixth step, which is the post-closing adjusting trial balance. And so again, this is the same thing that we've been doing. This is the second trial balance that we've done, but this is done after the adjustments to make sure our adjusting journal entries worked with the accounting cycle, that our debits and our credits are equal and stuff like that. So this is the second trial balance created after the adjusting entries have been recorded and posted to the ledger. So if we're looking at this, again, we're just looking at the notes we've been doing since chapter 2, the problem. This is what we should have right now. Now, we're not looking at the journal entries. All I care about right now is the T-tables. Now, in order for us to do this, we need to go through and find the account balances for every single one of these. Now, some of these are really easy, like unearned revenue wouldn't be too hard. Land is going to be super easy because 100,000 minus 0 is 100,000. Some of these can be tricky, which is cash. Again, with cash, what you're going to do is you're going to add up all the debits, including the beginning balance, add up all the credits, subtract the 2. So if you want to do that right now, pause the video real quick, do that just to see if you can do that on your own. I'm going to go ahead and go through and give you the answers to all these. So your account balance for cash is going to be, let's see, $28,500. Notice it goes on the debit side because that's our normal side, and that's also the side that has the bigger number too, the bigger sum, the debits. So our cash is going to be $28,500. Our supplies is $350. We know that from the adjustment that we did earlier. We don't have to really do anything from that. AR is going to be an ending balance of $24,000. And in the interest of time, I'm going to probably do these a little bit quicker. I'm just going to give you all of them. So if you want to stop the video and do this to make sure all these are correct, please do so. But I wanted to go ahead and get in with it. Notice I still haven't touched retained earnings T-table yet. I'm not going to touch that until the kind of very end. But it's just hanging out, sitting there. We don't have to worry about that right now. But I have all these end balances. Now I need to start putting these into the trial balance. So I'm going to start with my cash, and I'm going to put cash as the account, and debit the account $28,500. Okay, and then I want to put accounts receivables. I want to put $24,000. And I'm putting these in a specific way. You don't need to worry about these right now. You can put them in any order you want to because it's always going to come out the same as long as your debits and your credits are the same. But there is actually an order to the accounts, or the asset account specifically. We'll talk about that in another chapter too. Let's go to interest receivable, $600, and I'm just going to put the rest of them there. Okay, that way you don't have to watch me type out all these or these come out each time. So I have all these, and then if I were to add up all the debits, all from the top to the bottom, only in the debit column, that's going to give me $254,000. Okay, and then if I do the same thing to the credit, I'm hoping it really does give me $254,000. And it does. It does give me $254,000. So I know my adjusted trial balance is right because my debits and my credits equal. So now I can move on to the next step, which is going to be the financial statements. Appreciate it.